Hi, it's Mark here on Sunday, January the 11th, getting ready for the new trading week. And I think a very relevant time to do some analysis and to look a little bit closer at where the US dollar stands in terms of our trading opportunities. The US dollar is involved in so many of the CFDs that we trade. Always good to get an understanding, a viewpoint of where we stand right now, how we got to be where we are, and of course, as always, looking forward. The US dollar was fixed to the price of gold. That was according to the Bretton Woods Agreement. That was after the end of World War II. The gold standard at that time, $35 an ounce of gold. That didn't last. And under Nixon's presidency in 1971, the US dollar became free floating. Bretton Woods Agreement was dissolved. And from there onwards, the price of gold was determined by supply and demand. And that's where we stand right now. And some of the instruments that we trade involving the US dollar, I've got 6 of them listed here. The US dollar index is pretty much the US dollar versus the rest. A basket of currencies, it's got a base value of 100 and it fluctuates depending on supply and demand. Last year, 2025, US dollar had a very weak year. The US dollar was sold off. It's kind of tried to fight its way back towards the end of last year and where we're sitting right now, which is why I think it's so relevant to be analyzing right now. US dollar is looking to fight its way back. But if we look at it, if we look at last year, certainly a weak year. 95.7 the support, 110 resistance. That's 15 points. We'll look at the charts now. You'll see that's down it was down 9.5%. Can the US fight back? That's where we are right now. That's what we're looking at. If the US dollar can turn things around based on where it sits right now. The euro and the pound, the two European currencies, both of them strengthened against a weak US dollar. The euro strengthened the most, up 13.5%, support at 101, resistance 119, that's almost 2,000 pips. The pound also from 120 to 137, so weak US dollar against the pound as well. And then the yen and the Canadian, slightly different, but also the US dollar did weaken against both of these currencies. You'll see that the US fought back against the yen, particularly in the second half of last year. Canadian, US dollar also weakened against the Canadian, fought its way back in the latter part of last year. Overall, though, certainly weakened against the Canadian. And now, even though this isn't a currency, but of course, have to involve gold with just the way it's trended and the way gold's behaved the past year. 65%, which is phenomenal. Gold strengthened over the year from 2,600 up to 4,500. And I do believe that that was in no small way because of the US dollar's weakness. Yes, of course, gold did strengthen on its own merits, safe haven commodity, geopolitical events, but a big part of it, I believe, was gold, the US dollar's weakness, which contributed to gold's massive and historic rally. Let's have a look at some charts. The US dollar index, there's your high at 110, there's your low. You can see how it weakened against 9.5%. We saw the index weakened. Try to fight its way back second half of the year. Not really, but is trying to fight its way back now. Let's see if it can maintain. Important and relevant to me that last week on Friday, the first real data release of the year, the non-farm payroll, we saw the US dollar strengthen. The next big data release is going to be at the end of the month. The FOMC, the Fed interest rate decision, certainly will affect the US dollar. And going into it, it looks at this point like we have strong US dollar. We'll see whether buyers can maintain or whether we get a turnaround and we go back to weak US dollar and sellers looking down at support. If you look at the two major currencies, the European currencies, the euro and the pound, have a look at the euro from 101 to 119. That's how the euro strengthened. You saw 13.5%. US hasn't really fought its way back or struggled to fight its way back. You can see that. But the last 2 weeks, again, we're seeing the US is fighting its way back. It's attempting. Sellers are looking to break below this 116. We'll see if that can be maintained or if we're going to get a resumption of US dollar weakness and buyers step in and look back up at this 119, the resistance area. If you look at the pound, a similar pattern. You can see the pound strengthened against a weak US dollar from 120 up to 137. The US dollar did fight back more so than it did against the euro and then weakened again. But the last 2 weeks, we're seeing it. We saw it on the index, on the euro, here again on the pound. We're seeing US dollar trying to fight its way back. We got supported around 134. That's what sellers will be looking to break below. If there's a turnaround to dollar weakness, buyers will be looking to bounce up off this area, looking up at the 137. The US yen behaved differently. First half of the year, again, weak US dollar. Have a look at that. Down from 158 to 139. But the US did fight its way back. And that's because you had weak against weak. The yen, also with its own troubles, was weak. And of the two weak currencies, the US dollar did prevail and fought its way almost all the way back to the high and sitting at those levels now. So again, we're going to see if US dollar strength, like the last 2 weeks, can continue. Buyers will be looking up above this 158 level. If we go back to dollar weakness and it can't break above this resistance level, sellers will be looking down at the 156 or lower. And then you look at the US against the Canadian. Certainly, US was weak against a strong Canadian, all the way from almost 148 down to 135. US dollar did fight its way back in the latter part of last year. And then we went back to dollar weakness. Last 2 weeks, we've seen the US fighting its way back and putting in a strong fight against the Canadian. We'll see if buyers can continue this, get to that 140 or higher. Alternatively, if we go back to dollar weakness and sellers step in and it's back down to testing this very tough support area around the 135. And then, like I said, gold really strong, over 60% gold strengthened all the way up to sitting where it is right now at 4,500. It's a little different to obviously to the major currency pairs, but also I do believe that for gold to break this resistance level and continue going higher and setting new record highs, I think weak US dollar will certainly contribute to that in the way that it did contribute to the run that gold had last year. So we're sitting where we're sitting right now. We know that last year US dollar was weak. US dollar was sold off. We saw it on the index. We saw it against all of the majors. We've got levels to work with. And we can see that the US dollar is fighting its way back. So we want to know, is the US dollar going to continue this fight back, or is it going to be short-lived and we go back to dollar weakness like we saw last year? Yes, we're looking at weekly charts. And yes, I'm looking at the big picture. And in a lot of our trades, we might be trading the hourly chart, the 4-hour chart, the daily chart. However, I think it's very relevant to know the long-term trend. And I am definitely in favor of or a fan of a strategy that looks at the long-term trend, regardless of the time frame that you're trading. And certainly nothing wrong with having a strategy that the trades you take are in the direction of the long-term trend. Good trading out there.